This is the weekly review for the week of January 3rd to January 6th, as well as this week's Sunday preparation. So, coming into the week, I was anticipating price to trade back down into this uh, hourly order block and see if a low time frame long setup formed in here. And the drawn liquidity was this daily fair value gap up here, and also taking this trend line liquidity. Now, we sort of got that, but not exactly, because we RTO'd this in or on Sunday, um, so it was before Monday's trading, and price ended up just staying in consolidation until NFP, where I was kind of expecting price to trade up into here, into that daily fair value gap, and then NFP would cause the sell-off. So it was a little bit different than I expected. Um, but that was essentially how the structure of the week continued playing out. Um, we stayed in that 2 week consolidation to continue building up buy side and sell side, and then NFP took off higher, running all of the buy side. So on Tuesday's trading, because Monday was a bank holiday, my idea for a long setup didn't play out, so I was pretty much just ignoring these PD arrays down here because they were already used. And when I came into the charts, I noted that we had some bearish SMTs. We'd run that buy side up here already, and we had a bearish SMT there. And I saw this big displacement candle down here at 640. So that's what really got me drawn into the charts. And I thought that this looked like a market maker sell model, with this being the original consolidation. We have some relative equal lows here. And considering that the daily chart was still in consolidation, and we had just taken buy side liquidity with a SMT, I wasn't expecting this to now trade higher. Um, I was just expecting it to continue in consolidation. And I got a win here. Now this one, I did note in my journal, it was a lucky win for me because I entered a little bit higher than I should have, because normally, right, I enter in on the 50% level, but for some reason I anchored my fib to this low here, and that's where I got in at the 50%, and it hit the 1.3R. But if I actually placed my limit at the true 50% equilibrium level using that swing low to that swing high, the TP would have been swerved and I would have been stopped out. So that's why I just noted this as kind of a lucky win for me, um, because I made a mistake, and that ended up uh, playing out to my favor. Um, but after that, we ended up coming up higher, and the 9:30 open had a SMT with London high up here, which I was not expecting this. I thought that this fair value gap would be respected and we would trade down to the sell side. So this move up here I was not expecting at all. Um, but then we did form another setup with this SMT and displacement down, and I was looking to set a limit here, but I kind of saw that we probably weren't going to get a retracement up to premium, and that's exactly what ended up happening. We just stayed heavy and continued now taking sell side. Um, right, so again, the daily is still in consolidation, and we just took buy side, and it's likely to remain in consolidation. So now that's why we're taking sell side. And then in the lunch, or in the PM session rather, um, I made a mistake because I was trading off my phone while I was at work, and I was looking at this as a low time frame market maker sell model, and I completely missed this previous day low raid with SMT. If I had seen that live, uh, there would be no way I would be trying to short this fair value gap here. This was just a range on the 2 minute, right? So, or not this one. It would have been from this high to that low with this fair value gap here. But because I didn't see this, because I was on my phone, that's why I ended up taking this loss here. But if I had seen this raid, I would have been looking for a long setup here, but we never retraced back into discount. This fair value gap here in discount. We only dipped into the top fair value gap, which was in premium, so there was no trade setup here anyway, or I should say entry, even though there was a setup, and this would have been a very clean setup. Nice clean displacement, break in market structure. The only thing missing is the lack of returning to discount to get an entry. But yeah, that was pretty much it for Tuesday's trading. Deleted this SMT. So going into Wednesday's trading, we had FOMC meeting news on Wednesday. And when I opened the charts, I saw that we were just in this consolidation range, so I wasn't really expecting much. And I was also on my phone the whole trading day for Wednesday. So I saw that at the 9:30 open, we ended up rating buy side here with a SMT, and at this 10 a.m. candle or 10:05 when this candle closed, I started getting interested in a potential short, but then we ended up running sell side liquidity, the London low down here. So um, because of the fact that the daily was in consolidation and now the low time frame, we had a buy side raid and a sell side raid. Uh, I just really wasn't interested in taking this short setup. I just noted it to annotate that this is what I was looking at, but because of the fact we were stuck between two raids, I didn't end up taking it, and that was the right call. Now, I did note a 2 minute fair value gap here just because I saw a lower time frame trade. There was like a M1 break in market structure here. And I don't remember if this was in premium or not, or discount, I should say. Probably would not have taken this, to be honest. Um, but I was just noting this setup with the logic that you could have taken a long anticipating the short entry here. So that's just what I was marking out when I was watching this live. Now on ICT took a trade here, but that was on NASDAQ because NASDAQ, that same, remember there was a SMT here, SPX made that higher high. This looks like a clean market maker buy model, right? This looks like a clean buy entry even though this wasn't in discount, but this definitely looks like a market maker buy model where on S&P the same price action does not look like a market maker buy model. So that's why there was no clear even long entry here for me. But price ended up running up higher, and we had ended up having a SMT with this high here. This was the previous or yesterday's AM session high, and the reason why I noted it was just because it was the last high prior to this big displacement move down. So um, that for me is a significant high. And we ended up having a bearish setup form here. Now, all of this PM price action, um, even though I was on my phone that day, I wasn't really watching anything in the PM session. I kind of just closed the charts and just focused on my work for the afternoon. So when annotating this in hindsight, I also noted that you could have set a limit in this institutional order flow entry drill fair value gap here, anticipating the RTO to this bearish fair value gap. And we ended up having another bearish SMT here, breaking market structure. And then this was the FOMC wick. Broke market structure here again, and then came back up into premium for a second short entry here. So that was pretty much what I noted for Wednesday's trading. Not too much to say again because I wasn't watching this live, so I couldn't note any, annotations in my journal of like what I was thinking live. So this all PM session was just what I noted in hindsight. So going into Thursday's trading, still had the mindset that price higher time frame was in consolidation. I did just note this kind of clean London setup, even though I don't trade London, but took Asia low, break in market structure, came down into discount, and off to the races, taking equal highs here, taking equal highs here. So this was a very nice setup here in London session that I just noted. Now I was watching here when I got on the charts a little bit before 8 a.m. I was watching this displacement down, and I was looking for any type of rate or SMT, but there was nothing there, so I didn't really do anything. And then we had high impact news at 8:15. I think this was the ADP non-farm payroll or non-farm something or the other. That 8:15 news event, I forgot what it was. And this was just that M1 range that formed, and I noted how we came back up into premium, but this was not something that I would trade because, again, this just wasn't clear to me. So we ended up moving down for the rest of the AM session, and we took a bunch of sell side liquidity. So I was anticipating that we were going to have some type of reversal because we're still in consolidation again, and we had the SMT with Tuesday's low here, and I was just watching, saw we had a SMT with lunch low, and then right here at this candle at 1:20 p.m. got interested with this huge displacement up, and I immediately set a limit after we formed that swing high and got a winning trade here, hitting 1.3R. I was anticipating this to actually trade higher. Really, I just got out by the skin of my teeth here, and then it just immediately reversed and went below my stop loss. I was really looking at these equal highs as the draw on liquidity and potentially even coming up into these fair value gaps up here. So I was not at all anticipating this move to retrace for the remainder of the PM session. But we did have a win there. And then that just leaves us with Friday, which was NFP. and I was not on the charts at all because it was NFP. And ironically, the NFP price action turned out to be insanely clean. That if I had seen this live, I probably would have set a limit here. Um, Reason being, we had a very clean mentorship setup with previous day's low being taken with a SMT. We had right at NFP at 8:30, we had the break in market structure here, formed a dealing range, and then came back down into discount into this M15 fair value gap. I also noted this M5 and M4, M3, M2 fair value gap here. That's what this multiple time frame inefficiency is. But we came back down into discount and then ended up rallying higher. So not only did we have this YouTube model form here, but also the context behind this that I noted in my journal was the fact that typically NFP forms the Judas swing of the month. And if we're anticipating January to be bearish, should take these executions off so it looks cleaner. So if we're anticipating January to be bearish, because if we think that this is the quarterly shift that's happening, right, for the last 60 days, we've been taking buy-side liquidity and coming up. But now we've had that raid and a nice displacement break in market structure down. So this could potentially be the quarterly shift. And now in January to sometime in March, right, 20 to 60 days in the future, we're going to now be attacking sell side. So if that's the bias that we have, or the narrative that we think price is going to have, that means that January is going to be a bearish month. And we have this dealing range here with this fair value gap in premium. And if January is going to be a bearish month, we're going to trade up to take the high of the make the high of the month. And we have tons of confluence to make the high of the month up here with all of this untested or untaken buy-side liquidity with a daily fair value gap above this entire consolidation, right? With that context, we've had a bullish setup here, and we're thinking that price is going to make the high of the month up here. So all of that combined, for me, this would have been such a clean setup to take, but I just didn't really open the charts on Friday and just focus on getting work done. So I completely did not see this, but it is what it is. So that was pretty much it for this week. Had quite a few clean setups, to be honest. So going into next week, I'm going to keep that bias that we're going to continue trading higher into the daily fair value gap up here, because we didn't quite make it into premium yet or OTE entry. But I think that next week we're going to have a bearish week. So we're going to make the high of the week somewhere in this fair value gap, trading up into premium of the dealing range, and then we're going to end up trading lower. So, and then in terms of news, it also kind of backs up that logic, because we're going to have a big news week this week with high impact news with Fed Powell speaking, as well as the CPI news. So I'm anticipating a pretty big move this week outside of the daily consolidation, right? Because this was pretty much the weeks leading up to the Christmas holiday, and now in the beginning of January we have those two very high impact news events. So I think that that's going to cause price to leave the consolidation. So I'm going to watch for the high of the week to be formed up here and see if we could get a short setup. I just noted this bullish order block here. I don't know if we're going to end up trading down into it, but I don't think that we need to come down deep into a discount here. Like trading down into a discount to trade up into this fair value gap. I don't think it makes sense to do that, because if we're anticipating that this is the Judas swing, this should probably just continue going up to make the high of the week here and then reverse. So I don't think we're going to get much of a pullback if we're going to dig deeper into here. And then the logic for that I'm thinking for the rest of the month is going to be that we're going to come up into here and then end up taking this sell side. So we'll see what ends up happening. But I'm pretty confident on the bias coming into next week. So yeah.